Ethereum emergency update. We've seen the price go from $1,600 down to around $1,300. And what is this price action telling us? Well, in today's video, I'm going to show you that you don't actually need to know what's going to happen next to still make money with Ethereum, whether it's moving up or whether it's moving down with pattern recognition. So if you like today's content, like, subscribe, hit the bell notification, bringing you daily value on how to read the markets and being 2 steps ahead. So let's dive straight into Ethereum. So we did a video on Ethereum, I think it was 18th of July. And what we said was very likely to occur, keeping in mind that we can only ever do probabilities and never certainties, is that we're going to see the market continue to the upside, hit this particular key Fibonacci ratio called the 1.618, and then get some type of pullback. We ideally wanted to see an overlap into this if it was going to continue to the downside, but at the moment we haven't got that, but we have got the initial move to the upside. So let's just jump into a live chart with Ethereum to see how this is unfolding. So we can see here when we did the video on the 18th, I think the 18th was, when was the 18th? The 18th was around here, and it has moved and continued to the upside and hit this 1.618 as we anticipated. And we have had a reaction off that 1.618 as it has moved towards the downside. Really, really important. So what we're going to do today is really look at the 2 outcomes, the 2 high probability outcomes on Ethereum and what the price needs to do. And if it does, it gives us the valuable information. Before I dive into that, I can now, and you can now, get access to this very chart and have access to it, and you can upload it into your own Telegram, because a lot of people ask me about my stochastics RSI settings and how we do certain things. Well, if you actually join the R15 Crypto Gym, which is in the description link below, you can test it all out for £1, as little as £1. You'll get access to my Ethereum charts. We do 3 daily workouts now. We do Bitcoin daily workouts, Solana and BNB, where we do detailed analysis. People are loving the Bitcoin workout in particular. You also get access to the Crypto Bootcamp. The bootcamp is just 7 days of training, 7 days of Elliott Wave and Fibonacci, the real core foundations, and some other goodies, including you can join my private Telegram group as well. Phenomenal community. So check it out for £1. You can really explore the R15 Crypto Gym, where it's really showing you how to do the technique of what we're doing today, what we're doing with Ethereum. So let's just look at this. So what we've been saying with Ethereum is this price action over here. We're not sure what it is. So I'm going to actually show you 2 cases. So it's on 2 cases. So first thing, I'm going to just jump out of the daily chart. I'm going to look at the top left-hand corner. When you get access to this chart with the R15 Crypto Gym, you'll get this view. So it's view only, but then you can copy it and put it into your own trading view. So I'm just paying attention to the top left-hand corner where I keep my weekly chart, weekly time frame. I'm just going to zoom in, and the momentum on the weekly is something called overbought, where the blue and the red line is over this black line, over the 75 level, and it tells us that we're at or near a weekly high where we should anticipate overall sideways to down over the coming weeks. That's a really, really big clue when we're looking at this. And then with Ethereum, I just want to focus on the pattern position, right? There's really 2 outcomes that I'm seeing, right? So we've had this movement up, some type of correction, and another movement up, and some type of move to the downside. And really, there's only 2 main outcomes, high probability outcomes. So I'm just going to now clean this all up, right? This is no longer relevant to us. This is fine. This is served its purpose. This is fine. All right. So the first school of thought is this is some type of A, B, C correction, right? And when Ethereum, the momentum is a big clue because it measures the rate of change. And you can see how these highs, these local highs, marry up nicely when the blue line crosses below the red line, right? We can see that. It's not perfect, but it's in that range, right? It gives us a massive clue. And the same as the downside, right? We can see this over here, right? Hopefully that makes sense. But now Ethereum is what's called oversold, the blue and the red lines below this black line. It tells us that we're probably going to get a daily low, and that the price, as the momentum moves up, we're probably going to get the price moving up also. Right? That's what we're looking at over here. So what we're going to see more than likely over the coming days is that the momentum with Ethereum is going to move over the 75 line and then make a bearish reversal. And if and when it does this, really what the price does is going to tell us what the psychological mood is of the buying and selling behavior of everyone buying and selling Ethereum. Now, keep in mind, it was proven, and I know it's sometimes hard to get your head around this, but the price movement is based on human emotion, on crowd psychology, on fear and greed, and that's just replicating itself and repeating itself time and time again. So what we're looking at over here is if Ethereum goes over this high over here, it voids this wave count. So that means there's a different wave count. So the second alternative, which is actually what we'll lean towards if this high gets exceeded, and I'm going to show you how we can use this information either way. We don't have to be precious because it's important to know we have no control over which outcome it's going to be. The other wave count is that this is indeed a wave 1. This is a wave 2. And wave 1 and A's and wave 2's and B's, they look the same. And this, in fact, is a wave 3. This is an A, B, C of a potential wave 4. And then this will be a wave 5. I'm just going to change the color so we can see the two cases. Let's just change it to green, right? We'll change it to green. Which one is it going to be? Well, we don't actually know right now. We don't actually know. But there's a few clues. The clues are this. This initial move to the upside, it looks like 3 waves. And wave 1s don't normally form in 3 waves. So that will get us leaning towards wave A. This ABC looks like a B or a 2. They look identical, as in we wouldn't be able to differentiate between the two. This wave structure here, this hit the 1.618. 1.618 is a typical wave 3 and a maximum wave C, right? So we're in that zone, so that doesn't really help us. And this part here, it looks like a corrective pattern, but we're not sure. Another thing was if the price did overlap, which it hasn't, if it did, and it does over the next few days, if it overlaps into this range, then we got confirmation that it's going to be a wave C. That will be a confirmation for us, but it might not overlap. Another clue is that the weekly momentum is overbought. So what do we do with this? Well, quite simply, you stand aside. So we wouldn't take any short positions right now in terms of making money or betting on the price going down and shorting the market. Why? Because the daily momentum is oversold. What that means is the downside over the next few days should be limited. Right? We're going to stack the odds in our favor. So what we're going to simply do is wait for the momentum to go above this black line, which is the 75 level on the stochastics RSI. And it's been marrying up quite nicely with the price highs. Wait for the next bearish reversal and then review the pattern position. We're going to have one of two things happen. Either, if I just do it like this, I'm just going to zoom in like this. Either the price, I'm going to draw it like this so we're clear, is either going to exceed this high. If it exceeds this high, then we lean on the 5-wave structure. However, if it forms some type of A, B, C structure and does not exceed this high, that gives us a big clue that this is likely to be the first impulsive wave down. This is the first reaction, and we're likely to see a continuation to the downside. Both cases overall are going to lead to some type of downside movement. And what I mean by that is if on the yellow, if we get the yellow outcome, we're going to more than likely see this. And if we get the green outcome, we're going to still likely get some type of correction anyway. After a 5-wave sequence, you tend to get a correction. So both cases, it doesn't matter which one unfolds. The yellow one, if it does unfold, I'm going to draw this in yellow as well. I say yellow, we could argue it might actually be an orange, But let me just change this to an orange. It looks like an orange to me. All right, if it is indeed, in fact, let's do this to an orange as well, so we get it really, really clear. And we'll change this one to a green, so we got it really, really clear. All right, if it is the orange case study and that this price high does not get exceeded, we're likely to see a continuation to break this low down here. However, if it is a 5-wave structure, then you'll normally just get a correction that does not exceed this low over here. So what we're going to do with Ethereum is wait 3 to 5 days, allow for the momentum to become overbought, which is up here, and then make a bearish reversal, and then review the pattern. Is it the green scenario? Is it the orange scenario? Or is it something else? And that is going to tell us the psychological mood of the buying and selling behavior. By the way, if you want to learn more about Elliott Wave and how you can really, really leverage this information, because it's the best way by far of reading the price action, we don't even need to know what's going to happen. You can still make money from the markets. In the R15 Crypto Gym, I have something called the 7-day bootcamp. With the £1 trial, you'll get the 7-day bootcamp. And I'll just show you the first day. You'll get 1 day unlocked every single day. And you'll see stuff like this: introduction to Elliott Waves, Elliott Wave basics, the rules and the guidelines that you really, really want to pay attention to. And further down the guidelines, or in the bootcamp, we cover the Fibonacci price and how to do that as well. And then you'll also get access to the Bitcoin daily workouts, the Solana daily workouts, BNB daily workouts, and the charts as well, including today's chart of Ethereum and the Telegram. We've got loads of goodies. People are loving the R15 Crypto Gym. So with Ethereum, 2 case studies or 2 potential outcomes that are high probability. I'm leaning towards the orange, but if this high gets exceeded, this high over here, if this gets exceeded, then we'll lean towards the green, as in it's a 5-wave structure, but both will ultimately lead to a pullback more than likely over the coming days and weeks. And we want to be really, really aware of that. But then that's going to give us a feel for how deep the movement to the downside is likely to be, and then what we should anticipate after that as well. And then we can leverage that information to make money from the markets by shorting and longing the market. So if you found this valuable, give me a like, subscribe, because we're doing daily content to bring you massive, massive value every single day. Now, normally I read a quote from my best-selling book, the high probability or the award-winning book, Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. But I actually like a quote that was just ringing in my mind this morning, and it's from another book called Black Box Thinking. And it says this: beneath every success is a mountain of necessary failure. And a part of the learning curve is failing. But one of the things I wanted to bring to your attention when it comes to trading with high probability is that no one knows what's going to happen. But we can get consistent results even though we don't know what's going to happen. How? Well, it's the casino model. The casino has the edge in its favor. In the game of blackjack, there's a 4.5% edge over the market or over the participants. So therefore, when it plays $100 million worth of volume, it knows it's going to make 4.5%. And it's time and time again, it's proven tested as the casino business in a nutshell. That's the same model when it comes to trading. We stack the odds in our favor, where we look for double momentum, where we want the weekly and the daily pointing in the same direction. We look at the pattern position, what we're looking at. We look at Fibonacci price and Fibonacci time. And then we become the casino because we got the edge. And then we just trade consistently. And 4 out of 10 times, we anticipate that we get to ride the trend. And 5, 6 out of 10 times, we don't. We either take a small profit, we break even, or we take a small loss. And that is the art and the science of trading successfully. So join me tomorrow for the Bitcoin workout in the R15 Crypto Gym. It's £1. It's in the description link below. I'm telling you, you'll absolutely love it. You get a lot of goodies, I'm giving a lot of value away, a lot of education away, because you can upskill yourself so you can see what everyone else cannot see, because ultimately you are competing against other people, because the markets are a zero-sum game. For people to make money, others have to lose money. That's just the way the markets work. And it's your job to get the edge in your favor so you can win consistently. All right, like, subscribe, hit the bell notification, and I'll see you tomorrow.